Good morning, folks. How are we doing? I hope you had a great weekend. It is currently Monday, and I have one pair on watch, which is Euro Aussie. The market looking pretty awful across the board after the gapping and the erratic price action that we saw last night. So just letting those pairs do their thing, and we'll see if any of them kind of settle. The price action actually settles by the end of the week. If it doesn't, I don't care. So what I've got on watch today is Euro Aussie, and I'm looking at this because if we just zoom out, so on the higher time frames, we've broken out of all of this. We have all this price action up here. Okay, it's moving to the downside. All in all, we have these impulse correction continuations. Okay, we've had a corrective move back up, but I'm also aware of this whole thing is very wide relative to the move down which has preceded it. So already I'm thinking about the fact that this could end up being an M-style pattern where we start tapping into these highs again, just because this is very wide relative to that move down. Okay, but once again, if we've got something of significance to work with as we start to dissect this, then even if that is the case, we could still be looking at perhaps a shorter term move down to here, to this significant low where I've got my arrow pointed before that even takes place. So we could be all the way back down here before we start coming back up to the top to test the high, because this is very wide relative to the overall, the initial move down. So I'm looking at what's happening as I drill down. So if we zoom down a little bit, so what I'm seeing at the minute, so I'm looking at this, so we have this volume here. I'm looking at if we just go to the 1 hour chart, I'm looking at the pieces of the puzzle. So we have the move down. Okay, we tap into this. There's a little sharp move there, which is a bit more prevalent on the 15-minute. Then we break to the downside. Okay, we break to the downside. We leave a little footprint. We gap to it. These gaps often imply where the liquidity is, especially when it's the retest of the back end of a previous low. We tap that area, move down correctively to start with, but then we start to move to the downside. We have this high here. Okay, we get this kind of 1, 2, 3, implying a completion of a move. We tap that area where the volume likely is, which just happens to be the retest of the back end of all of this, and we start to move to the downside. But before we do that, we get a little scoop double top. Okay, nothing, just the market doesn't just reach an area and go. Often it does these little things where we scoop back up, move to the downside. Now I'm looking at this. Okay, so we started trending to the downside, then we get this big sideways correction. But the clue for me that this is where the volume likely is. Okay, let's just get all of this off the chart a second. So I'm just trying to dissect, has price actually, as it's working its way down, has it tapped into anything? And if it has, where's the next area that it's likely to tap into? So we have this volume here. We have all of this volume here. Okay, there's a lot of volume here, if you include this whole range. And we sold off, last time we reached that area, we sold off quite impulsively, okay, giving me a clue that that's where there's likely liquidity. So how we sold off from the area, so we have a lot of volume, and how we sold off from the area last time around gives me a clue as to how much volume there likely is there. And if we actually just look at this, we just analyze this, what do you notice? We have, ever so slightly, we left a slight gap to that area. And if you look at what happened again, when we got near to that area last time around, we left a slight gap and then tried to sell off. We got to that area again. This time we kind of wicked to it, but again, we wicked to the area, not really through it. We wicked through it by like a pip or half a pip. Okay, so each time that price does that, it's giving me a clue that as people are selling this, and if they have their stops above there, okay, many of these stops will likely still be there, okay? Many people will be out of the trade, but if we get close to an area, where are people likely to have their stops? They're likely to put their stops above the area. If people sold here, where are they likely to have their stops? Probably, if they're looking left, above here, because this is the first significant high that you can see. Many of them go, okay, well, I have my stops above there. Many of these people that sold here, if they're looking left, and these people here, where are they likely to have their stops? Perhaps above there, okay? And then we break above, and you can see we're getting some impulsive momentum. It's suggesting that we may have washed out a lot of these stops. But what I'm going to be looking for specifically, because I'm not forgetting what I just said to you on the higher time frames, that this whole thing is very wide relative to the overall move down. Okay, because I'm not forgetting that. Why is that important? Well, it's important because if the whole thing on the higher time frames, the whole move sideways is very wide relative to the move down, then it's entirely possible that this, because we've come from an impulsive move up, this could be just a sideways correction like this that ends up looking like this, something like that, which retests that the high that we've just broken above, and then moves to the upside. Okay, so we start retesting this area, and then this whole thing just becomes a bull flag to push higher. Okay, and then this would likely give it the volume to move a lot higher. Okay, the volume that's been built up in this. So what I'm looking for specifically, as I'm looking for a break below all of these highs that we've just broken above. So even that near miss, if we break back below here and we get what I'm looking for. So if we get any kind of flag whatsoever, a move back down here, an impulsive move down, what's the 4 hour looking like? If we just look at the 4 hour, a little bit of momentum, but this could all change because obviously this candle doesn't close until 10 o'clock, and it's currently literally just turned 9 as I speak. But if we get that move down, especially if we get that 4 hour, which retraces all of this bullish 4 hour, and we get that consolidation afterwards, that is a very good sign. You know, this is not pushing higher. Okay, it's very unlikely that this would push higher, and then because we would have washed out all the stops, negated that possible bull flag which I just illustrated, and then I would look to get short as a first inflection point, which I don't think holds much weight at all. We'd have that there. By this point, we would be down here, and I wouldn't be worried so much about this because if we just measured this overall move, we would have retraced about 70% of that move by then. This is not what you don't typically see something like this form, and then suddenly price comes all the way down to here and then moves up from there. That's an atypical structure. So if we do reach all the way down to here, we're likely following our way all down to here, and that's where I would set the take profit because it's a significant low. Okay, you can even see it on the daily. So that means that even if we were to continue pushing lower from here, okay, it's likely that we would stall in this area for a significant period of time and probably build, quite a bit of volume, something like that for the next leg lower. And, you could be sat through that for 2 or 3 days. If you just look at the candles, look at the timestamps at the bottom of the screen. So I would be happy to set a take profit there. And what I would do is I'd measure the high that we've just broken above the range. I'd measure 90% of that, and I would set the take profit at the 90% area where price typically pulls back deeply. Even if it's going to continue going, what do we see? We see these near misses. So they often get to a significant low, they near miss, and then price does something like that, and you end up with sitting through something quite wide before it continues, and you sit through this for like 3 days, and then in the end it doesn't commit anyway, so you've unnecessarily sat through something for 3 days, okay, when you didn't need to. It's about stacking the wins. So that's what I'm going to be looking for today, folks. We'll see if this is quite a clear, there's no ambiguity to me, because either we're pushing back below here, and if we push down impulsively and we get this, I'm looking to get short on the break or within it, depending on which flag it is, or this is the start, this little wick here that we've seen is the start of that bull structure. And you might be thinking, well, why aren't you looking for the bull structure? I'm not looking for the bull structure because if you just count the candles, it's currently 9 a.m. This, something which even remotely resembled this, wouldn't be ready until, look, tomorrow. So 7 a.m. tomorrow, that would look. So if price does this, and by tomorrow morning we get something which resembles this bull structure, I will be looking for the longs. Okay, so I know what I'm looking for, I know what I'm not looking for, and that's why I don't have any anxiety in trading whatsoever, because I know what I'm looking for, and that's as simple as I need to keep it. Will I have a bit more anxiety when I'm trading larger capital? We shall see. I'm still on a very small funded account at the minute, but maybe things will change when I'm trading more capital, but we shall see. All I know is I'm made of sterner stuff, so I'm sure I'll be fine with that. But I hope you've enjoyed this video, and I will see you again in the next one. Have a great rest of your day.